Governor Bailey, you surprised the market recently, raising interest rates by 50. You did a double. Why did you feel the need to do that?
Well, it really picks up on the theme that Christine has just developed. First of all, I mean, the UK economy has turned out to be much more resilient, and that's a good thing. I mean, there's many good aspects to that. But what goes with that resilience is signs of a very tight labour market, which is showing through in pay awards, but also showing through. I mean, we have an unemployment rate of 3.8%, which is historically right at the low end. So that resilience is coming through that way. But when we looked at again, to Christine's point, when we looked at the data, because we too are being driven by evidence at the moment, the cumulative data, both particularly on the labour market and on the inflation release we had, which to us showed clear signs of persistence, caused us to conclude that we had to make really quite a strong move at that point. It was justified. My own view on that was, if we were really of the view that we were going to do 25 and then we were really sort of baked in for another 25 based on the evidence we'd seen, it was better to do the 50. And then we will, as Christine said, we will be evidence-driven, so we will wait for the next set of evidence for our next meeting, which, to Christine's point again, will also be one where we will have a full forecast.
Have you received a lot of flack for the move?
Well, I think at the moment I can understand why there are critics of us and central banks. We have a job to do. I'm very clear that our job, all of us are very clear, I think our job is to return inflation to target, and we will do what is necessary. I understand the concerns that go with that, but I'm afraid I always have to say that it is a worse outcome if we don't get inflation back to target.